Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
So today we have the market update for the Las Vegas real estate market for October of 2022.
Perfect. So if you like charts, if you like data, please subscribe, hit the notification bell, like the video. Let's go.
Okay, so we're going to start off. This is what we're going to do on this video. We do this every month, but we're going to do the housing market, just single family homes first.
Okay.
And then we're going to do condos, because there's two different things and two similar things that really are very telltale to what's happening in the housing market. That's very interesting. And this is information that looks forward to give us an idea what potentially going to happen. Mm-hmm. We're gonna go through all that. Okay. So we're going to start first with the market action index. This is the numerical estimate based on all the data. Remember, we got this data from Altos Research, so we use the same data every month. You may watch other channels or hear other people with different data, and they may just be pulling MLS data or something, but we're specifically focused on Las Vegas single-family homes. And then we because we want to be able to measure the change, and if you change your data every month, then you're going to have, the numbers won't make sense, right? You'll have fake numbers going up and down. So we just grab the same data every month.
Right, and it also makes it handy because you get to see the same type of charts every month, so it's easier to compare and contrast what's happening in the market.
Okay, so this first one, the market action index, you can see the needle is over. We're still in a seller's market, but it's basically what I would call neutral market. We're not in a buyer's market, we're not in a seller's market. This thing says seller slight advantage. What's interesting is last month it was 37 and now it's 34. So the needle was swinging, but it's starting to stop. Mm-hmm. Now, actually this happens every October. The needle basically bottoms out, and then November, and then it starts climbing again, right. December, January. And it's doing that this month. Like, it's doing the same thing. I think what freaked people out is it was a 90, in February, March, and it's been falling quickly. But this clearly shows that market action index is stabilizing. Right.
And remember when the market was in the 80s or 90, whatever it was, that was not a natural market. Okay, that was a market reacting and overreacting to all kinds of events that most of us have not seen in our lifetime. So that's part of the reason why this change has been so dramatic over a short period of time.
Now we're going to start with the data that's the scariest looking, because it's the thing everyone talks about. And then as we go through the other data, you'll realize it's not like terrible. Okay. Now this is median list price. Now remember what list price is. List price is what the seller thinks the house is worth.
Or as I like to call it, list price is an invitation to make an offer.
And what's interesting about this chart is that we broke the market into 4 quartiles: the top, the upper, the lower, and the bottom. And you can see that if you look at the 3 bottom lines, which is the bottom 3/4 of the market, the list prices are declining slightly, but nothing ridiculously dramatic. It's really the top of the market taking a haircut, which I attribute quite a bit to the change in interest rates.
Mm-hmm. Right, it is. So remember that top of the market is actually 2 segments. It's that 750 to 1.2, and those people are more likely to get financing than the people buying multi-million-dollar homes. But the people buying multi-million-dollar homes, that's a smaller section of the market. So that's why this part of the market looks so dramatic. Also, anybody having a price reduction in that price range, that price reduction is going to be much more dramatic looking than in the lower price point. So if you're reducing your list price by $100,000, well, is it off of $2 million? Because that's not as dramatic as it would be if you were reducing your price by $100,000 off of $300,000.
Right. Yeah, it's the numbers are bigger, higher up, so that makes the numbers look bigger.
Right.
Yeah, and that's exactly what the chart shows. Mm-hmm. It shows that the big changes are because if you completely took out the top quarter of the market, it would look like list prices tanked substantially, but they didn't. You just took out all the top ones, so the median is now much lower because you have to go lower to find the median, right? Okay, inventory. This is the one that's been a lot of people have been talking about, climbing inventory. And as you can see, every year it climbs, it starts climbing in May. Mm-hmm. It starts climbing in May through the summer, and because the spring is the hottest time. What I think freaked people out was the level of the inventory climbing because of the change in interest rates. And then people who are going to sell in the fall and the winter deciding to get the house on the market sooner to try to get, a buyer at a better, that could get a better interest rate.
Right.
What's really interesting about this chart, although it looks a bit scary, if you look all the way to the left, we're still below what the inventory level was 3 years ago, which is contrary to what a lot of people think. The other interesting thing is that dashed line is the 7-day average. It is a leading indicator because it's just what's happened in the last 7 days. And then the dashed line is the 90-day average, and it takes a little while for that to catch up. But this thing, as you look, that's a leading indicator by about a month. And we had said months and months ago that October, November, this thing would level off. The inventory would basically chill out and go to it would level, wherever it was, it would basically stop going up. And you can see that 90-day, the 7-day indicator, leading indicator, shows that this thing is getting ready to level off. Right. So either later October, maybe by next month when we do the November update, we'll see inventory basically starting to just chill out and go to a normal level.
Right. So remember, this time of the year, people decide that if the house hasn't sold, maybe they're going to go ahead and take it off the market, or maybe they're not going to put it on the market until after the holidays. It's not unusual for us to see withdrawn listings at this time of the year, for people to go ahead and have their holidays, have their families come for Thanksgiving, Christmas, that sort of thing, and then bring the homes back on the market the beginning of the year.
The other thing about this chart is it looks scarier than it is, because that very bottom of the market, or the very bottom line, is not zero, it's 1,000 listings. So if you had that extra line down there, you would see that the increase is not as much as it appears. It looks like it's like 10 times as much. It's not. The other thing too to keep in mind is that when we were down to 1,400 inventory, that was historically ridiculous. Like, we haven't had that ever. For the number of houses in Las Vegas as a percentage, we've never had inventory that low. So you're making a comparison off an artificially low number, so it makes it look worse than it is. But actually, like we've been talking about, we're just going back to a normal market. Plus, the interest rates are a little out of whack. And because the transition happened fast, a lot of people freaked out.
Right.
So there's some definitely emotional stuff happening. Now, median days on the market. This chart is very interesting too, because you can see we're still at historically very low median days on the market. Historically 90 to 180 days, right, Oana?
Right. So normally when you put a house on the market, it sells somewhere between 90 and 180 days. Because the first portion of the listing is the optimistic price, then you get some feedback and you start adjusting the price, and then finding that point where buyers are starting to make offers, and you kind of find that place where the buyer and the seller come to an agreement, and that usually happens somewhere between 90 and 180 days.
Now, what's interesting about this chart too is if you look back the last 2020, beginning of this last year and then beginning of 2021, is that November, December is when the median days of the market starts to drop again. And then, it actually, you start to have less homes on the market. And then, so what happens is you have the buying picks up. So you have actually the days on the market will start to turn around. We still have to go pretty high for this to get back to the normal. What it probably is going to do is go back to a more normal market, and then any change in interest rates is probably going to set this thing off again.
Right.
As far as this thing we went through where stuff wasn't staying on the market very long. Because even right now, like Oana said, half the homes on the market are still selling in under 40 days, which is pretty impressive.
Right. So, if interest rates become more favorable, then buyers will definitely come back to the market. And I think that they'll come back in higher numbers maybe than expected, because they're going to try to take advantage of the lower interest rates with the concern that they're going to pop back up. So they're going to try to seize the opportunity to purchase something at a little bit better interest rate before the interest rates pop back up. We're going to probably see higher interest rates for maybe a few more months, maybe close to a year. But they will return to something more favorable for all of us. The idea that we're going to see 2 and 3% interest rates, I don't think that's going to happen anytime soon. but I think that they will come back to something more affordable than where they are now.
Price per square foot. This is the closed price per square foot based on purchase price. This is for the whole housing market, but just single family homes. This doesn't include condos. And you can see that it definitely is starting a very slow decline, but not what you would expect given interest rates literally more than double what they were 9 months ago. So this is shows that the housing market in Vegas is very resilient. It's very strong to have such a small decline given what's happening.
Right.
Because other markets that we've heard about aren't having this luck.
Right. And Las Vegas is really good about finding new ways to grow and attract people. So that's one of the things that helps us as far as moving inventory, is we just keep bringing people to Vegas.
Now we're going to go through the condo market here because there's some interesting stuff in here that is going to surprise you. Okay, so we'll start with the market action index. This looks very much like the market action index for single family homes. It went from 41 to 38 over the last 30 days, but it's not. It's that swing of the needle starting to slow down and stop, and then every year in November, December, this thing starts to pick up and starts to head more toward a seller's market. Now, what I think we expected was this thing to be around 20 or below 30, but it's not. And it probably won't break 30. And it says on there, slight seller's advantage. And when we go through the data, you're going to be a little surprised how well the condo market is actually doing.
Right. So, part of the reason why the condo market's doing better is, of course, because condos tend to be at a lower price point. Also keep in mind that condos do have generally higher association fees, but those are fixed costs as opposed to interest rates that have a variability to them, as opposed to the HOA dues that generally are pretty fixed.
This is the price per square foot chart. Now you can see that it's declining, but it does this every year at this time of year. If you go back to 2021, the hottest year ever in real estate, what did price per square foot of condos do? They declined. So if you look at the chart, they declined from June to October, just like they're doing now. They literally copying exactly what happened last year. Doesn't mean the leading indicator shows that they will continue to drop a bit, but we know once inventory levels off, buyer demand will pick up in the spring, and this thing looks like it'll probably take off again. Now, I'm not saying it's going to appreciate like it did last year, but it doesn't look like there's any risk for the condo market in Las Vegas that's anything it can't handle. There's like nothing fundamentally showing condos in Vegas are like,
Right. They tend to be pretty solid, barring some other crazy black swan event.
This inventory chart is also very interesting, and this is why. When we showed you the single family market, we showed that leading indicator of inventory was starting to level off, right? Which is great news for the market. Well, what's happening here is the exact same thing is happening. You're seeing that 7-day average supply of inventory hasn't changed. What that means is the total number of houses on the market is relatively stable, so that as homes come on the market, homes are being purchased. And Oana mentioned that there'll be people who pull their listings out of the MLS because they don't have to sell. They would only sell if they get a certain price. They tested the market, they don't like it, so they're going to pull their listing. But the good thing about that is without a bunch of listings on the market, it's not incentive for people to dump their prices.
Right. Yeah, so it helps everybody. It's not unusual for sellers to put homes on the market and have optimistic pricing and say, hey, you know what? I didn't get my number. I don't have to sell. I'll wait until the market catches up with what I would like for my property.
The other interesting thing about this for the condo market is you can see if you look back to 2021 and 2019 and 2020, 2019, which is all the way on the left, 2019, we're still way below the normal inventory for condos, like way below. And you can see that leading edge, that leading indicator shows we're probably not even going to get back there, which is interesting because interest rates, it just shows that the condo market's not as sensitive to interest rates as more expensive single family residential homes would be.
Right. And again, part of the reason is because they're at a lower price point, and so they are more likely to be purchased cash. So that's part of what supports those values.
median days on the market here, you can see that it's still historically ridiculously low. Half of the condos are selling in under 40 days, about 30 days. And the other thing this chart shows, now it does show that it looks like it's increasing, but it does increase this time every year. You can see back in 2021, it did the same thing. It increased all the way to December, January, and then it started declining again. But what this really shows is there's quite a bit of volatility, because you have transition buyers who are in the residential market, but then they flipped over to buy a condo, and then they sucked up all the demand for condos because they were tired of competing for multiple offers, and they could, it's easier to compete at a lower price point if you have money than if you're trying to stretch your money and compete at a higher price point.
Right.
Right.
All right.
Okay, last chart. This is the median list price. Okay. Now this looks a lot like the price per square foot. What happened in June of 2021 to October, November of 2021? Median list price fell. The hottest market ever, it fell. What's it doing again? It's falling. So, but it's not fall. If you look at the trend line, it's not falling as fast as it went up. So it doesn't appear that the condo market in Vegas is really at risk. And this is a bit weird if you think about it, because this is literally like consumer sentiment about housing is pretty low. Affordability is pretty low. Interest rates are the highest they've been in quite a while. But look at what's happening with median list prices are just barely dropping, and it doesn't look like there's this market is panicking. It doesn't look like there's panic sellers out there with tons of price drops. You're not seeing that. You're seeing it a little bit. You're seeing it in residential, especially in the high end. But when you get to the lower end and you get the condo market, it's not there.
Right. Yeah. So look, sellers are not panicking because remember, sellers have great interest rates, and most sellers don't have to sell.
Our numerous investors, we're talking a lot of houses that we work with. We've asked them all, do you want to sell your house? And what's always their answer?
No. Short answer is no. Look, when you have a 3% interest rate, even if you are just purchasing something straight across the board, you're going to be trading your 3% interest rate for a 6% interest rate. That doesn't make sense. And you've got costs to get out of this property, costs to get into the next property. Again, that doesn't make sense. If you're just going to sell and take the money, that's fine, but then you've got costs to get out, and then you're paying taxes on the money. So there are all kinds of reasons why that doesn't make sense in most instances. Obviously, everybody's situation is different, but in most instances, it doesn't make sense, because if for no other reason than just trading the same exact loan for the new loan is at twice the interest rate, that just does not make any sense.
The other thing that we're seeing that's very interesting is the number of institutional buyers as well as regular investors with cash that are still in the market.
Right.
That they found that there are some deals from 3 or 4 months ago. They can get some properties a little cheaper. The flippers are still here, surprisingly,
yes,
which you normally don't see in a declining market, despite the fact that the big institutional flippers, Open Door, OfferPad, Redfin, Zillow, and all those have been, they've very famously taking hundreds of millions of dollars, if not billions of dollars of losses flipping houses. Even when home prices were shooting up, they were still losing money. They couldn't flip a house and make money, right? And we actually have a whole video that we're going to do on this, because we have some more data as to what's happening in that institutional market. But they still have between $40 and $50 billion to buy houses. And although a lot of the people that were going to go buy that $600,000 house now maybe won't do it because the interest rates are too high, or maybe they will do it, I don't know. We've certainly seen in condos that it's not the interest rates. You would expect interest rates doubling to affect the market more, and it's not really happening.
Right. So we want to know what you think. Please leave us comments. Please keep the comments the subject matter and not personal to anybody responding to comments and that sort of thing, because we want to know what you think and not personal stuff. We like it when it's civil in the comments, so please keep it civil. We appreciate you watching. If you like charts, if you like data, if you like the discussion, please subscribe, hit the notification bell, like the video, share the video, and we'll see you on the next video. Bye.
Bye.